Hi guys! Welcome to another Mortgage Hack Monday. My name is Annette. I am your residential loan officer based out of Sunnyside, Newport Beach. I'm here to give you ironclad tips to help you make smart mortgage choices. Now today I'm going to talk about top things to avoid during a purchase or refinance transaction. But before I begin, I'm going to ask you to go ahead and like, comment, or share. That way you can continue getting awesome tips in the future. Alright, so one of the top things I come across often doing mortgage refinances and purchase transactions is clients do not often realize the importance of certain things that may affect their approval. One of the first things is acquiring new debt. Okay, once you initiate your mortgage process, it's very important not to rack up any credit card charges to avoid increasing any credit limits. When you do that, typically what happens is suddenly we have to recalculate your minimum monthly payments, and that affects your overall debt and income ratio. So racking up credit card debts or co-signing on a new car, let's say helping your daughter or your sister with their new car purchase, even though they're making that payment, it still affects your ability to qualify. So it's very, very important during the transaction to avoid running any other credit inquiries, to minimize any normal expenditures, so that way you don't charge anything on your credit cards, don't charge anything on your credit line. And then third part I would say is a top category is make sure your employment stays consistent. Now what do I mean by consistent? I mean if you work a lot of overtime, don't suddenly make changes to your schedule, because overtime is something that is very critical the way they calculate it. So if suddenly near closing your overtime hours suddenly drop and there's no pre-planned vacation trips planned, then those things may affect your approval. Okay, so make sure you don't make any changes. I've had clients that have switched from their regular W-2 employment over to a 1099 position, and it's great because they don't get they don't get taxed. However, because of the way we get clients approved on income calculation, they can no longer qualify. Okay, so keep that in mind. Consistency is very crucial when you're trying to close a loan. Okay, so to reiterate, remember not to open any new debt. Number one, not to rack up your current debts, so credit card debts, home equity lines, not to incur any additional credit checks, and most importantly, avoid at all costs any major changes to your income. So no reduced overtime, no switching employers, unless you're salaried and there's an offer letter, but that's an example for another day. So hopefully that helps, and keep in mind, tune in for my next Mortgage Hack Monday. Until next time, thanks for joining me. Bye.